Despite being anywhere from hundreds to thousands of miles away from it, Wall Street has the ability to send an impact that reverberates through our communities. I'm Sam Hoyle, your neighborhood reporter. You've probably heard a lot of stuff happening over the last couple of days, so let's try and break it down into bite-sized chunks.
Leading up to Election Day, President Trump began touting a 25% tariff on Mexico and Canada and a 10% tariff on China. After his election, President Trump ordered for those tariffs, saying they would go into effect on March 4th. The United States tariffs go into effect. Canada and China retaliate immediately with tariffs of their own, and Mexico waits to impose retaliatory tariffs. 2 days later, the Trump administration opted to pause tariffs on goods that fall under the U.S.-Mexico-Canada trade agreement, which the Trump administration brokered during his first term. Lastly, well, not likely lastly, but at least for the moment, the Trump administration plans to levy tariffs on Canadian steel and aluminum in response to a surcharge on energy supplied by Canada to several northern states.
We rely on Canada and Mexico for importing raw goods, timber, potash, aluminum from Canada, and especially labor from Mexico. And those only improve our standards of living. And so just because one country decides to start a trade war doesn't mean we need to reciprocate. There are better ways to maintain trade balances or to stop the flow of fentanyl.
That's Richard Gearhart, an associate economics professor from CSUB. We'll hear more from him in a second. Now, I did gloss over quite a bit, but that is a good chunk of what has happened so far on the tariffs front. And as a result, the stock market has fallen a bit. Over the last month, the S&P 500 dropped nearly 8% in a month, the Dow over 6.5%, and the NASDAQ over 10%. According to a Gallup poll from April of last year, nearly 2/3 of Americans have money in the stock market. So what does this mean for the average person whose baseline of investing is their 401k retirement account?
It's not an immediate issue, but over the course of the next 2 or 3 months, the economic news is going to bear a lot of watching.
Gearhart says for people who are decades away from retirement, it is not time to offload your retirement account. But for those who are closing in on their golden years, it might be a good time to start touching base with a professional to assess options.
If you're going to retire in 20 or 30 years, you want to stay in the market. However, if you're looking at retiring in the next few years, this is when you have to be very concerned about what your allocation, what your portfolio looks like, to make sure that you don't have tremendous downside risk where if the stock market crashes, then you lose all your money. And that is a much realer possibility today than it was a week ago.
Now, again, this is not financial advice, nor is it meant to cause panic, but rather keep you informed on what's happening at the federal level. And we'll continue to keep you informed as more information becomes available both on air and online. In Bakersfield, I'm Sam Hoyle, your neighborhood reporter.